Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host, Joel Elcon, along with Dennis Dick, and we have Tim Anderson on the line. He's the managing director of TJM Investments, speaking to us directly from the floor of the New York Stock Exchange. And are you in there fighting for position at the GE post?
Well, not yet, but there'll probably be a lot of people there in a little less than an hour.
All right, Dennis and I are having a good debate here about, a more effective way to use their money as opposed to doing this buyback here. Perhaps issuing a special dividend. You saw what Costco did when they did it. Why don't you talk a little bit about the dynamics behind this, and do you think the company made a good move?
Well, I think they made a good move by selling all the assets that they're selling. I think that GE Capital has kind of been a 50-pound weight around their neck for quite a few years. It caused them a lot of headaches back in the global financial crisis. It made them kind of qualify that part of their business as a bank, and a lot of institutions that aren't necessarily traditional banks that became banks after that have been trying to get rid of that bank classification. MetLife is probably the best example. And then this is just going to give them a lot of cash and a lot more flexibility to get involved in what they think are going to be higher margin businesses going forward.
So, Tim,
whether or not they should pay look, I wouldn't be surprised if they've got a $50 billion dollar buyback authorized. That doesn't mean they're going to use it all. It wouldn't be out of the question if a month or two down the road they said, you know what, we should do a special dividend here.
Yeah, because my argument was, and just talking about the special dividends, it seems like the investors out there are so hungry for dividends right now that they really reward the companies for doing that lately. And here we look at the shares of GE, and sure, it's a nice pop. They're popping $1.85, but with 10 billion shares outstanding and $50 billion of buyback, they could have did a $5 special dividend. And I would gather that if they would have announced a $5 special dividend this morning, that the shares would be a lot higher than $27.55 right now. What are your thoughts on that?
Well, that's a good argument. I mean, people do want dividends. There's no doubt about it. I mean, S&P dividends grew very strongly last year, and even in the first quarter. The tax rate is down on dividends. People have a real hard time getting returns from fixed income investments because rates are so low, and dividends are in favor and in demand.
Just sticking with the low interest rate theme here too, what are your thoughts on, just switching off from the GE for a second, what are your thoughts on some of these utility stocks? Because I've been looking at these things and they've been getting beats here because obviously they think maybe interest rates are going up towards the end of the year here. But if you look at something like a Southern SO, or if you even want to look at, the overall index or something, what are your thoughts here on some of the utility stocks? Because they've really been beat up. And some of these things have 4 or 5% dividends.
I think that they're going through a transfer of ownership a little bit, and I think that I think they got way ahead of themselves in December and in January.
Right.
I think a lot of that was driven by some Japanese pension money that was chasing yield.
Okay.
No doubt yields in Japan are much lower than they are here. And I think that there are some very large global macro hedge funds that started establishing large short positions in utilities, and maybe even some parts of the REIT world back in the first quarter on the theory that rates are eventually going to go up.
What are your thoughts?
I certainly also think that I think that the better companies that are yielding, 4% or maybe a little bit more, there's a very good reason to own them in certain portfolios. There's no doubt about it. These companies basically have regulated rates of return, and the dividends in most of them are probably safe. Now
Just
there
looking.
are certain aspects of the utility world that some of the merchant stocks and some of the stocks that kind of grew out of all the Enron energy trading mess 15 years ago. But your classic electric utility stocks that are yielding 4%, I would certainly not hesitate to start to take positions in the higher quality names.
What are your thoughts on interest rates here towards the, like, a lot of people saying they may not raise them in June, but they'll probably raise them in September. Then some people are saying, like JC Pretz on the show here yesterday, and I've said it multiple times too, I don't think they're raising them this year. What are your thoughts here on interest rates?
I think they are. I think they are raising them this year.
Yeah.
I think, clearly it's going to be somewhat data dependent, but I just think they're so far down the road toward raising them that I think they risk a little bit of credibility if they back away from it at this point. They can obviously justify it depending on what the economy is going to do. But look at the verbiage that came out of the March meeting. There was they talked about it almost as if it was a 50-50 split on whether or not they should raise rates in June. Now, that was before the March employment report came out the first week in April, but that was just one employment report. That could have been a hiccup. We don't know yet. And I think that so basically what you've got is even the the hawks on the Fed aren't voting members anymore. They've actually retired Plosser and Fisher, and so the moderates, Bullard, etc., they're in favor of raising rates either in June or September. And it's only the people that the terminal doves that think rates should be zero for at least the next 10 years, they're not going to change their mind no matter what.
Tim, let's go into some specific issues here, okay? GM, General Motors, had some news earlier in the week. They knocked it down pretty good on the secondary. Also, the Canadian government sold a nice chunk of stock here ahead of earnings. Had a nice run up, started to kiss the $39, $40 level, came back to 36 here, found some support. What's your take on GM?
I think that on weakness, there's going to be buyers of it. I mean, the Canadian government sale really wasn't a dilutive transaction. Those shares were already outstanding. They weren't in the float, but they were already outstanding. Now, clearly, 75 million shares comes to market. It's going to come at a discount. There's no doubt about it. But it wasn't really a dilutive trade where they were issuing new treasury stock. And I think the average age of a car on the road now is 11 or 12 years. There's got to be pent up demand. I'm not really making a call on if their product is more or less desirable than Ford or Chrysler or some of the imports, but there's got to be pent up demand for autos, and they still have issues. There's no doubt about it. But on weakness, there's going to be buyers of that stuff. I don't think people have to chase it real aggressively, but when you see it get beat up 3 or 4 days in a row, that's probably a time to take a shot.
Tim, what are your thoughts here on Tesla? So obviously the electric motor here, it's a little bit of competition, but it's so small here. I don't know if GM is really concerned about here or not. But what are your thoughts here, first of all, on the Tesla technology? Do you believe in the electric car, and do you believe that's where it's going?
Well, I have to say that I'm probably more of a cynic on it than a big believer. But that notwithstanding, it's really, really hard to bet against this guy, Elon Musk. He's got he seems to be a very good operator. He seems to be very good at the PR aspect of the game. I don't think there's any doubt that the electric car market is going to grow over time. how they address, the battery issue in terms of how far you can go without a charge, where the charging stations are going to be. Who knows how that gets resolved? Maybe you need some type of a technological breakthrough to get there. But the issue is clearly, valuation.
Yeah.
I mean, I wouldn't buy it if I was running a lot of money. And, I just think that how do you justify the valuation? You've got to have everything go right for 3 or 4 years in a row to justify the valuation there. But that market probably will expand over time. There's no doubt about it.
Couple downgrades of Apple over the last few days here, weighing on the stock a little bit. Has been in a consolidation period here. The iWatch or Apple Watch event coming up, earnings coming up. Buy, sell, or hold here in Apple?
I mean, for me, I just think it would be a hold. I mean, if you're in it, you're up money in it unless you bought it a month ago. Anytime they come up with one of these products, it usually takes them a couple of iterations to, get it really cooking. The price is obviously a little bit of an issue for the iWatch, but I don't think they were looking to, pump out 20 million of these things in the first quarter anyways. When they first came out with I think the very first iPhone came out at about $800. And that was even through a carrier with a plan. And then it came down over the next, 12 to 18 months.
Tim, I know you wanted to talk about oil a little bit here, and a lot of people like to trade, those ETFs, the DWTI, which is a negatively correlated. I can't think of what the name of the symbol on the other one is, but just talking general crude market here, $50 trading at 50.34, had that bump up earlier in the week here. Are we just gonna cling to this $50 level here in crude, or what's your outlook?
Well, if you look at a chart, if it can get through this, $50 level for WTI, $56 level for Brent, and it could run into the mid 60s. Maybe the high 60s on Brent, and there have been a lot of reasons for it to go down, including the last inventory report. And yes, it did go down, 5 or 6% that day after it had gone up 5 or 6% the day before and 2 or 3% the day before that. I got to think that the maximum pain trade right now among the oil traders is for it to go up. And market seems to be following it, day to day, almost yesterday, hour to hour. And I think some people talk about it a little bit, but I don't think it's gotten enough play. The rig count keeps coming down.
Okay,
there's a pretty strong correlation with the rig count coming down a certain percentage of what it was from the top, and then that much production being taken off the market, and then the price of oil going up.
We've been on the line with Tim Anderson. He is the managing director of TJM Investments, LLC, joining us from the floor of the New York Stock Exchange. Go in there and get into that G post and buy Dennis a couple million shares, because he's really bullish the stock here at 27.45.
How am I bullish?
I don't know. No, we had a fun debate on it. We'll see what happens. It'll probably never close over 28 again. But anyways, Tim, thanks a lot for joining us. We'll talk to you again soon.
All right, guys. Have a great weekend.
Thanks, Tim.